Baker-Hughes just posted record free cash flow of $2.7 billion for 2025. That's up 21% from last year. But here's what's really interesting. Their industrial and energy technology segment booked nearly $15 billion in orders, setting a new record, while their oilfield services business continued to face headwinds. So, what's driving this split performance? Let's break down Baker-Hughes' fourth quarter and full year 2025 results. In today's video, we're analyzing Baker-Hughes' results for the fourth quarter and full year 2025. We'll examine first, the company's overall financial performance and what drove the revenue mix. Second, how the two main segments performed, industrial and energy technology versus oilfield services. Third, the massive order backlog and what it means for future revenue. Fourth, cash flow generation and capital allocation. And finally, management's outlook for 2026. Let's dive in. Baker-Hughes delivered solid fourth quarter results. Revenue came in at $7.4 billion, essentially flat compared to the fourth quarter of 2024, but here's the important detail. This flat top line masks very different trends underneath. Orders reached $7.9 billion, up 5% year over year, with the book-to-bill ratio at 1.1. Net income attributable to Baker-Hughes was $876 million. On an adjusted basis, earnings per share came in at 78 cents, up 12% compared to the same quarter last year. Adjusted EBITDA reached $1.3 billion, up 2% year over year. For the full year 2025, Baker-Hughes generated $28 billion in revenue, essentially flat with 2024. However, profitability improved significantly. Adjusted EBITDA reached $4.8 billion, up 5% from the prior year. Net income attributable to Baker-Hughes totaled $2.6 billion. Adjusted earnings per share came in at $2.60, matching GAAP earnings per share, which shows the company had minimal one-time adjustments this year. Most impressively, operating cash flow reached $3.8 billion and free cash flow hit a record $2.7 billion, up 21% from 2024. This strong cash generation is a key theme we'll return to. Now let's look at the two business segments, starting with Industrial and Energy Technology, or IET. This segment had an outstanding year. Fourth quarter orders reached $4 billion, up 7% year over year, driven by strength in climate technology solutions and continued momentum in gas technology services. For the full year, IET booked nearly $15 billion in orders, a new record and above management's guidance. Revenue for the quarter was $3.8 billion, up 9% compared to last year. The segment delivered $761 million in EBITDA with margins of 20%, up from 18% a year ago. For the full year, IET generated $13.4 billion in revenue, up 10%, with EBITDA of $2.5 billion, up 21%. What's particularly interesting about IET's order book is its diversity. Management highlighted that for the second consecutive year, non-LNG equipment orders represented approximately 85% of total IET orders. The segment saw strong bookings across multiple areas: LNG projects in the U.S., power generation equipment for data centers, compression equipment for industrial applications, and climate technology solutions. Gas technology equipment orders were $1.8 billion for the quarter. Gas technology services added nearly $1 billion in orders. Industrial technology, which includes industrial products and solutions, contributed almost $1 billion. This diversity reduces the segment's dependence on any single end market. Now let's turn to Oilfield Services and Equipment, or OFSE. This segment faced continued headwinds. Fourth quarter revenue was $3.6 billion, down 8% year over year. For the full year, revenue declined to $14.3 billion, down 8% from 2024. The story here is macro-driven weakness in oil and gas activity, particularly in North America and international markets. Fourth quarter orders were $3.9 billion, down slightly on a sequential basis. Segment EBITDA for the quarter was $647 million with margins of 18%, down from nearly 20% a year ago. However, management maintained margin discipline through cost actions, preventing a steeper decline despite lower volumes. Looking at OFSE's geographic performance, North America revenue was $943 million in the fourth quarter, down 3% year over year, reflecting reduced drilling activity. International revenue totaled $2.6 billion, down 9%. The Middle East and Asia region generated $1.4 billion, down 7%. Latin America was $613 million, down 7%. Europe, CIS, and Sub-Saharan Africa came in at 624 million, down 16%. The weakness was fairly broad-based across all major regions, confirming this is an industry-wide downturn rather than company-specific issues. One of the most important metrics for Baker-Hughes is remaining performance obligations, or RPO, essentially the order backlog. At the end of the full fourth quarter, total RPO reached a record $36 billion, up from $35.3 billion in the prior quarter. IET's backlog alone stood at $32.4 billion, also a record. Within IET, gas technology equipment backlog was $11.6 billion, and gas technology services was $16.1 billion. OFSE backlog was $3.5 billion. This massive backlog provides significant revenue visibility and supports management's confidence in future growth, particularly in the IET segment. Baker-Hughes delivered exceptional cash flow performance in 2025. Operating cash flow for the fourth quarter was $1.7 billion, up 40% year over year. For the full year, operating cash flow reached $3.8 billion. Free cash flow for the quarter was $1.3 billion, and for the year hit a record $2.7 billion. This strong cash generation was driven by working capital efficiency and customer down payments on large projects. The company ended the year with $3.7 billion in cash. Capital expenditures for the year totaled $1.1 billion. Long-term debt stood at $5.4 billion, with the company maintaining a solid investment-grade balance sheet. On capital allocation, Baker-Hughes returned cash to shareholders through dividends. The company paid $910 million in dividends during 2025. The quarterly dividend is 23 cents per share. The company also repurchased $384 million worth of stock during the year. However, the focus appears to be shifting towards strategic investments. Management mentioned transaction-related costs of $128 million for the year, related to business disposals and acquisitions, signaling active portfolio management. The company is positioning itself for what management calls Horizon 2, which represents 2026 through 2028. Looking ahead to 2026, management provided several important guideposts. First, they expect IET orders to remain at robust levels, with similar organic order intake compared to 2025. They're seeing continued momentum in LNG projects, stronger FPSO and gas infrastructure awards, and sustained demand for power systems, particularly driven by data center build-out. For overall profitability, management expects mid-single-digit organic adjusted EBITDA growth. Within that, they're targeting IET margin expansion to reach their 20% target. For OFSE, they expect margins to remain relatively flat as the segment navigates continued macro headwinds. The company emphasized that recent portfolio actions are positioning Baker-Hughes as a more production-oriented business with enhanced cash flow durability. Let's summarize the key takeaways from Baker-Hughes results. First, the company delivered record free cash flow of $2.7 billion, demonstrating strong execution and working capital management. Second, there's a clear divergence between segments. IET is thriving with record orders and improving margins, while OFSE faces cyclical headwinds. Third, the order backlog of $36 billion provides significant revenue visibility, particularly for IET. Fourth, the company is successfully diversifying beyond LNG, with 85% of IET orders coming from other end markets. And finally, management is positioning the business for reduced cyclicity through its evolution into what they call a more industrialized energy solutions company. The strong IET performance and record backlog suggest the company is well-positioned despite near-term OFSE weakness. That wraps up our analysis of Baker-Hughes' fourth quarter and full year 2025 results. If you found this breakdown helpful, please subscribe to the channel for more earnings analysis. Remember, this material is for educational purposes only and does not constitute investment advice. Investing in stocks carries the risk of capital loss. Always consult with a financial advisor before making investment decisions. Thanks for watching, and I'll see you in the next video.